The markets are down yet again. This is Des here at Grok Trade. It's Thursday, March 27th, 2014. Markets go into bearish territory. You'll see the S&P down 0.2% with the Dow at break even. Nasdaq though down 0.54% with the Russells down 0.35%. The banks off a whopping 1.5%, showing significant weakness, taking all strength out of the foundation of any sort of bull run today. However, in the face of that, we saw a tick lower in fear. So fear dropping by 2%. Very interesting to see the banks dropping so aggressively, but fear also dropping. It's an anomaly you do not see very often. It'd be interesting tomorrow to see who wins. We'll look at the technicals to come up with our ideas on what might happen. Gold slammed again, down 0.65%. Silver down also. Crude oil up more than 1%. Crude oil not doing too badly here as of late. US dollar up almost 0.3%. Big tick higher in utilities, which is a defensive sector, up 0.74%. And here we are looking at the S&P 500. Lower high, lower low. We had popped up. The problem with this rally higher is we stalled at resistance and dropped, giving us our double top. We should have rallied higher, hit this area and then dropped. It didn't do that. We came up, boom, tested that high, lost that fight, come back down, boom, boom, broke a trend line, boom, to the downside. Today we went down, hit this low, which is really close to it. This swing low, support area, got down there. Buyers came in on that weakness, came back up, but still a bearish day overall, kind of a hammer-esque type formation. What I'm looking for, gang, is if we can get higher than 1856, almost 1857 going into tomorrow, giving us a bounce. If so, I'm going to be looking at, let me get it drawn in here. This area is resistance. And you might be wondering how I'm drawing that trend line, and it is more science than it is art. You want to be spot on this stuff. Anyway, it's just problematic now that we're below the 20-day moving average. We are now caught between the 50 and the 20-day. Usually bad things happen once you get caught up in there for very long. Anyway, something I want to show you on the Nasdaq that is troubling. The Nasdaq, we have this line. Now this goes way back to June of 2013. Then we tag it again right here in October 13. Then whack it hard right here around February 14. And today, check this out. Today we broke under it, found support at the 100-day, much like we did here. But we closed below a major trend line. Gang, that's a break in the ice. Bad things can happen now with the Nasdaq. Significant weakness in the Nasdaq. Nasdaq out of the major indices led the charge to the downside on Thursday. Bad news. I am not sure that if we do try to rally back, we could get just hung up on this trend line for a few trading bars and then drop. If we drop soon, it will be one big red ugly candlestick right here. The only thing that could save us is an immediate about face. We come up with a nice healthy white candlestick or green right here to get back between these trend lines, to heal itself and to look for a rally. But right now the odds are against it. Here are small caps, drop. We're here, a spinning top type candlestick, caught between the 100-day, 50-day moving average. You know, it wouldn't surprise me to get a little bounce here. I'm just seeing a ton of weakness out there in the markets. Here we're looking at gold. I thought we'd get support here at the 61.8 on the Fibonacci retracement. We broke that today. Man, gold is just really weak, just horrible. down. We do have a hammer though on silver. Silver looks like it's found a bottom. It's wanting to go higher, but that would be a risk trade at best. Apple is pulling back down. I said down here would be the nice buy area. It's drifting down lower. I like that. It's dropping on lower volume. I really like what I'm seeing here. Looking for a buy opportunity on another day or two going southbound. Amazon down 1%. But what's interesting here is this is the 200-day moving average. We went down. We rallied back above it. That's a hammer. Gang, even though we're below this support area, if you want to gamble a little bit here, put a stop loss in a smart area, you will have a big reward to risk ratio here. Just keep your risk small. But there could be a big buy opportunity here on Amazon. Facebook, same thing. I mean, it's in so much trouble. It broke the line yesterday. We talked about that danger today. We come crashing down again. The 100-day acting as support. We rally back. We have a hammer. Will it rally higher? Odds are against it because of this area of resistance. But let's see what happens. Exciting times here in the markets. Google goes down. Touch this line that we had drawn yesterday and went down, touched it, came right back up. So anyway, big volume. It's hard telling if this area will act as support or not. LinkedIn was up. Man, LinkedIn found that support. I said LinkedIn, look for an opportunity here. It could be looking for a bounce. Sure enough, went down. Hammers out. Look for upside potential on LinkedIn. Microsoft off 1%. Really pretty bull pullback. Looking for an entry here on Microsoft. It's a hot deal. Netflix down 2%. Just stay away from that. Even though it's starting to roll over here, it is starting to roll over. It might want to rally, but it might be a short-lived rally. Twitter up more than 4%. And oh man, it was in so much trouble yesterday. It's trying to heal itself. It does have a hammer. Risky at best to enter right now, but there could be a trade here. So man, I didn't tell you guys that if you want to know about gaps, we do have a program coming up tonight. I doubt there's any seats left for tonight. You might go in there just to find out if there's any left. We cap out at 500. Sorry. There are seats for tomorrow during the day, and then Saturday I know there's seats there, but it's a popular one. We're talking about gaps, the 3 different kinds of gaps you need to know about, and also major trend reversals, and that will definitely help you in your trading. Take care. Share this with a friend. We'll catch you guys later.